Thank you for joining us. I'm Sonali Basak, Wall Street correspondent at Bloomberg Television and Bloomberg News. I'm so pleased to be joined today on a panel on the future of fintech by Dame Jayne-Anne Gadhia, the founder of fintech company Snoop, Blythe Masters, the CEO of Motive Partners, which specializes in fintech investing, and Jim Ovia, the founder and chairman of Zenith Bank in Nigeria. Jayne-Anne, I do want to start with you. As a founder of a company, what are some of the challenges in building your own firm?
Well, particularly during a pandemic, I think is a good question. I think, being really clear on where you're going, making sure you've got the right people. I often wondered whether I should bring in sort of new people to this, but I do think, building a team that's worked together before has been very powerful. Putting the customer at the heart of everything, and then choosing technology from the myriad of different opportunities that's going to be sustainable, effective, and deliver on what you really want to, for the future. So I think a strong proposition, bringing the team together, being clear on the technology, and then, of course, raising the funding. It's always difficult to get all of those things going with only a few people, but delighted to say that we and so many other fintechs have managed that, and it's very exciting. I advise my daughter, who's just about to go to university, to set up her own business because it's just so fun.
Well, speaking of the funding part of that equation, that's a great place to bring in Blythe. What are your criteria? What are really the things that show you that a business can be cutting edge and really change the trajectory finances on?
So that's a big question. And I think maybe a place to start is to recognize just the sheer scale of what constitutes the fintech investment opportunity in the years to come. More than $1 in every $4 that are spent on technology are spent on financial technology by both financial firms and non-financial firms seeking to embed financial aspects into the way that they interact with their customer base. That adds up to about a $10 trillion market opportunity. And within that, obviously, there's a whole array of different types of business that are investable, both in the public and in the private markets. Where we focus is in private equity as a growth and buyout stage investment firm. And we really like the kinds of businesses that are infrastructure-like, in that they provide technology that financial services players can use to deliver product to their customers, where that technology is mission critical and has an established path to the provider being profitable and establishing a competitive moat around their business. So it's a combination of looking for both product that has key attributes as well as key competitive positioning that we like to look at in establishing investment criteria.
So I do want to get into some of these ideas that Jayne-Anne and Blythe had brought up on more specific technologies, because really, it truly is such a broad category at the end of the day. But Jim, I do want to see also first, from a big established bank in Africa, what are some of the opportunities you see in adopting fintech?
Thank you. The opportunities that exist in African continent, particularly Nigeria, being one of the largest economies in Africa, had to do with the large population in Nigeria, about 200 million, and the millennial being able to develop fintech to reach the large population of the millennials is also very important, particularly transactions that had to deal with technology, disseminating through the internet, online transactions, and also disseminating through some of the global brands like MasterCard, and to be able to go to store and merchants. We are one of the largest merchant acquirers in the country today, and that is very pleasing to the millennials. And it's also very important because the millennials really blossom so quickly and so well in the area of fintech technology.
Dame Jayne-Anne, can you talk to us a little about the technology itself? Before I became a financial reporter, I was a technology reporter. And it seems to me that the two worlds have had a lot of trouble talking to each other for a very long amount of time. So where are you seeing the biggest ability to bridge that gap?
Oh, I think rather than getting into the specific technologies, because there are a number, as we know, I think that the key for finance firms and technology firms is to realize that the future for financial technology is new. I think that, looking back at the banks that I've worked in previous years, just putting a digital front end onto legacy systems is never going to be the right way forward. I spent an awful lot of time in previous banks trying to work out, for example, how to get a single customer view. And so technology now needs to be, and is of course, flexible, customer driven, easy to support and develop, enables the customer rather than the product to be at the heart of things. And for me, that means, managing a complete transformation of existing companies' tech stacks. And I think that's really is one of the cutting edges of successful fintech for the future. New technology, flexible technology, digitally driven, and with people that are very clear about how to move forward and to build on the innovations that are still to come. So not getting locked in a legacy way, I think, is absolutely critical.
That sounds expensive.
Oh, no, I don't think it is expensive. I mean, the legacy systems are the most expensive, as we know, and particularly the way in which that we can build these days through sprints. I mean, we've built Snoop through fortnightly sprints for the last 15 months. And I think being able to move forward in such a way as to continue to build whilst you're live is the thing that makes this sort of so much more economical than having to build old-fashioned systems, which were, fully tested and therefore took months end to end before they went out to the public, and then you found that you've got problems to deal with. So this sort of iterative approach, I think, means that innovation and efficiency go hand in hand with digital and new technologies.
Blythe, when you're looking at the investment opportunity, what are some of the technologies that excite you the most, or is there a completely different way you're looking at the atmosphere?
We don't focus on picking and investing in early stage technologies and seeking to bet on who will be the winners and losers. Where we get most excited is where we see a business that has an existing or the potential to grow a network effect, and then to deploy technology to enable the delivery of product through that network that is scalable, has operational leverage, and that can grow by using technology to improve the quality of the product, to change the nature of interaction, to digitize previously manual or paper-based or human-intervened processes, and so on. And what I'm really describing is businesses that have platform-like characteristics, where parts of that network that exists can be brought together in a fashion that is more efficient using an array of different technologies. As you already heard, there are, of course, many technologies which are coming of age as we speak simultaneously, with the broader availability of broadband internet connections, the development of cloud services, and the reduction in costs associated with compute power and storage that's coming with that, the deployment of machine learning and AI, the development of distributed ledger technology, to enable straight-through processing between multiple independent processes. All of these technologies can coexist, and the fact that they are coming of age at the same time is what makes the opportunity to develop platform-like businesses that connect broad networks so exciting, and particularly so in the context of financial services, which in many respects has lagged behind some of the other big sectors in our economy in terms of the kind of disruption that platform businesses can bring to the space. So over the next 5 to 10 years, we expect to see the development of many fully integrated end-to-end platform businesses that are serving the financial processing space, and that will ultimately link issuers of capital to investors of capital, but in a much more efficient way than the heavily intermediated heavily manually intervened and paper-based processes that still exist today.
I'm wondering if you have some examples, Blythe, of companies that have mastered this kind of network effect that you're talking about, whether it's in your own portfolio or other examples out there.
Well, I'd say a great example actually is a company whose name I love because it's descriptive and accurate, called InvestCloud, which today is the amalgamation of three prior companies, a front-end business at Fanatics and at InvestCloud, which connects with investment advisors, whether those be private banks, RIAs here in the US, IFAs in Europe, all of those individuals, all of those businesses that connect with individuals in delivering investment products, combined with a third company, Tegra 118, which was a post-trade servicing platform for managed accounts, serving a very significant component of the investment management industry. Brought together under one umbrella of the newly formed InvestCloud. This is now an end-to-end business that serves a high percentage of the investment product manufacturers in the world and links them to the end distributors in a way that can very materially reduce the cost of distribution for those manufacturers and broaden the array of investment product available to the end distributors who are responsible for advising, investing their end customers. So it's a great example of a platform business serving the investment management and wealth advisory business in an end-to-end way, in a fully cloud-native, beautiful user interfaces, digital front end, with APIs, with microservices, very modern infrastructure that really eases the process all the way from manufacturing, post-trade processing, all the way through to distribution to the end investor. Great example of a platform business in the making.
Jim, I'd love to pull you in here because you had already mentioned one big established company like MasterCard, right? But when you look around at the fintech examples around you, what are some interesting examples of newly formed companies that you may be watching for one reason or the other?
Okay. Africa has a total population of over 1.2, 1.3 billion people, out of which over 350 million are unbanked. They do not have bank account. They never step their foot into any bank. So they rely on fintech. They rely on the online payment system through their mobile phone, mobile app, and that is where the fintech blossoms greatly. Hence, a number of fintech companies are doing great in Nigeria and the rest of Africa. In fact, some of the up-and-coming young, new fintech companies, you may have heard of such names as Paga, and you may also have heard about such other names of other fintech companies that have blossomed so well. And one of them is beginning to be a unicorn, almost $1 billion in valuation. Quite a number of young, new fintech companies are coming up that a number of banks are partnering with, cooperating, collaborating, because they support them in reaching out to the very young and to those who are unbanked. That is why quite a number are doing very well. You have 350 million individuals that do not have any bank account at all. And that's why it's very important for us to partner with them very quickly and very aggressively.
Yeah, that was going to be my next question, how fintech might compete with the big existing banks in their current form. What kind of concerns do you have about competition?
Okay, I will probably say the fintech and the banks are participating in a way that I will call co-op competition. While they are collaborating, they are also competing, not competing for different customers, the same customers that they cooperate with, while the bank will perform the overall services. The bank needs a fintech company to bring in the unbanked, 350 million persons in Africa, huge number. They bring them to the banking system through the fintech company, who hitherto would not have done any banking transactions at all. And the banking transaction is done through the fintech company. So it is a cooperation, collaboration, and participating for the common good of both the fintech as well as the banks.
What advice, Jayne-Anne, would you have for the banking system to stay on the cutting edge as new players start to emerge? In the U.S., we're seeing a firm like Stripe, for example. The gap between their valuation and Goldman Sachs is less than $40 billion these days, or about $40 billion. So the delta's it's really significantly closing. How do the big banks, the established players, stay ahead?
Oh, I mean, I think they have the challenge, I think, for the big players is that they need to invest in their own existing customer base and technologies, of course, but they need to change. And so managing the transformation to be constantly nimble and innovative, I think, is the biggest challenge. How are they going to do that? Now, when I was leading Virgin Money, which I ran for a number of years, the only way in which we found to do that was to run a parallel banking business. We called it Virgin Money Digital, alongside the legacy bank. And that enabled us to operate in some ways like a fintech, whilst at the same time having the sort of annuity income streams that come from a traditional banking platform. And in my own experience, that's the only way to stay ahead, is to run in parallel and then to move with the sort of people that will come into the digital organizations such as Stripe and others, put that into your digital organization and, as I say, run in parallel with the legacy business.
Blythe, I'd be remiss if I didn't ask you also about the potential for distributed ledger and blockchain technology, right? We have seen so many banks so hesitant to adopt cryptocurrencies, but blockchain, we're already seeing a number of deals being done on distributed ledger. So I'm wondering what the future is.
Well, for me, for all of these new technologies, and of course I think of crypto more than anything, I think that it is inevitable, and we have to make sure that the banking world is ready for such significant changes. For me, from a crypto point of view, we're going to get there. If you look back over the last, I don't know, many generations, money has always changed in type and scale and the way in which it's used. And for me, I think crypto is the way ahead. It needs to be properly regulated, and existing bankers need to put into how that's going to work. So for everything that's going to change, we need to just accept it, make sure that it's safe, bring in traditional expertise, but look forward, not back.
Blythe, do you have an answer here too for what you're saying?
Yeah, happy to add to that. I agree with the sentiment that it's important to ensure proper regulation of new products, both for the purposes of consumer protection and ultimately systemic stability. There's also often a lot of confusion in this area because of the conflation of cryptocurrencies with blockchain, or perhaps more generically distributed ledger technology known as DLT. And cryptocurrencies are just one application of blockchain technology. There are, and I think that the interest in cryptocurrencies, which is obviously currently being fueled by concerns about inflation and the value of fiat currencies, is an interesting economic debate in its own right, and whether or not one could see cryptocurrencies as an alternative to investments in commodities like gold is certainly driving some of that institutional and retail interest. DLT more broadly actually holds potentially a lot more promise for addressing far less sexy, if you will, use cases that are nonetheless deeply dragging on the performance and the efficacy of financial services for ultimately the end investor and the end issuer. So what I'm referring to is the enormous inefficiencies that arise from the fact that essentially there is this absence of platform-like capabilities in financial services, with the result that the many interested parties in the financial services ecosystem keep their own disparate and inconsistent records of activity, which we then spend billions of dollars and many man and woman hours addressing in terms of reconciling those disparate records during the process of financial processing. And it is that brings you the anomaly that despite the fact that we have the technology today to see self-driving vehicles on the streets, we still can't settle for cash the sale of a common stock in typically less than 2 full business days. The stuff that goes on in the 2 full business days between the trade date and the settlement date on a common stock, it involves a lot of processing inefficiency, manual intervention, potential for error, that distributed ledger technology has the ability to materially improve. And in fact, if you look at some of the more interesting projects around the world, whether it's what DTCC is up to or ASX in Australia, they're exploring, in the case of ASX, actually implementing distributed ledger technology to effectuate settlement and clearing in the cash equities markets in a manner that will eliminate a lot of that post-trade pain in the operational space that adds both cost and risk to the system. So seeing the development of platform businesses where multiple independent parties are able to share a common record of simple financial transactions and be able to independently authenticate and audit those transactions without having to keep their own separate record, which then requires reconciliation, is the promise that distributed ledger technology offers for the financial services space. And that is a more profound change, and it will go further in terms of changing essentially the costs and the wastage in the financial services system than the narrow use case of simply using cryptocurrency as an alternative store of value to something like gold. So I think it's a bigger deal and has much more significant long-term implications.
Jayne-Anne, because you had mentioned the promise of crypto, and we only have about a minute left here, do you think, how are you using it at Snoop?
We're not using it at Snoop at the moment, but we have every expectation that we'll do so in the future. So yeah, I think it's super important, and I suspect in the next decade it will become something that's much more normal for us all to be operating with.